Hello again, this is Alex with MasterChartsTrading.com, and this is market recap for Friday, December 30th, 2016. So stocks, we look at quite a bit of funds for stocks, and they're basically pulling back from all-time highs, but for now are showing this is a current variety of shallow retrace with bullish divergences. Junk bonds are hitting all-time highs. This is great for stocks. We'll look at some of the investment grade bond funds and especially the corporate ones, which are showing resilience. The major currencies are finally maybe ripe for a bounce against the dollar, and this should help gold, but we'll look at it in a little bit more detail and see if it's finally out of the woods. Oil again gained, and it's at 52-week highs. I'm kind of waiting for the sellers to basically step in. Natural gas is a little bit overextended as it hits 52-week highs and 52-week highs, and copper is bullish but may need to do some more correcting before heading higher. All right, so S&P 500 ETF SPY on the daily time frame. This is a total return. In other words, the dividends are added back into the price. So for now, basically we hit all-time highs and now we're pulling back. So this is, let me just do a quick measure from all-time highs to the Friday lows. This is a 2% retracement. So very normal, very shallow retrace, and nothing so far to worry about. Here's a bunch of market breadth indicators that I follow, and this is advanced decline volume and advanced decline lines for the S&P 500. You can see that we hit all-time highs actually even just last week here. So this is a bullish divergence. You can see that we're moving higher on advanced decline lines, but we moved down a little bit on the actual price of the index. So for now, I don't see any major issues. This is a minor thing. If anything, this is a bullish divergence. So for now, I'll be looking to basically find the bottom and go long. Dow Jones Industrial Average, same thing, kind of even more resilient than S&P 500, kind of pulled back, very shallow pullback again, but we keep hitting all-time highs on the advanced decline lines. So far I don't see any major issues with the Dow Jones Industrial Average. Here's QQQ. This one underperformed the general market, but it is by no means weak because we did hit all-time highs just this week on Tuesday. And the highs are confirmed by all-time highs in advanced decline and advanced decline volume lines. So no divergences there, and the participation is broad. IWM, the Russell 2000, this one barely moved back. Even we can do peak to trough. That's about 3%, I guess. And for small caps, this is very minor. Same thing, we are hitting all-time highs on the advanced decline lines. So I see no major divergences just yet on this. And here's finally the piece of a puzzle, this New York Stock Exchange Composite Index. This candle is kind of goofy, and I hope they adjusted, but we can just ignore it as well and concentrate on the actual advanced decline issues and advanced decline volume lines. Also all-time highs here. More importantly, this is a new highs less new lows divided by total active symbols, and this is how I do it: NYHL divided by NY tot, like that. And it hit plus 10% back here in June, and so far I see very little in terms of new lows. There's very little pressure in terms of new lows. In other words, we haven't hit minus 10% just yet. And here are the longer term indicators, the percentage of stocks above the 200-day EMA and the bullish percent index, and they are well above the 60% or even about 50% if we draw a line pretty tightly we're around 70% or so. So long term, I see no issues with major indices. Let's briefly go through the sector funds. This is technology. About 20% of the S&P 500 is in technology. All-time highs just this week, and all-time highs in advanced decline lines as well. So I don't see any issues there right now. Financials, incredible move. You can see off the November lows until a couple of weeks ago. This is a 23% move. So go figure. Advanced decline lines, advanced decline volumes also at all-time highs. No issues that I'm aware of here. This one has been under pressure. This is consumer discretionary. This one lost a little bit more than the rest of the market, about almost 4% here. But I see no major divergences as advanced decline lines also are hitting all-time highs. So if anything, this could be already a buying opportunity. Industrials, same thing, recently all-time highs, but and also advanced decline lines are also hitting all-time highs. So no divergences that I'm aware of, and this is a good-looking chart. And even though it is somewhat overbought, it is a good thing that it is overbought because it takes a lot of buying pressure to push security into overbought territory. So moving on to a little bit more underperforming stocks. Well, this one is in general underperforming, but actually right now this is actually energy, and this is also hitting 52-week highs. This fund is very top heavy, so like two of the top stocks, the Chevron and the ExxonMobil, account for over 30% of this fund, and you can see that it is reflected in the advanced decline line. It had not yet broken out to at least 52-week highs, but you can see the volume line did break out to 52-week highs. And like I said, big heavyweight companies dominate this index, so it makes sense that volume is breaking out. But nevertheless, we have to respect this is 52-week highs, so this looks bullish now. Maybe we'll get a pullback, and then maybe we'll take a long position. So I did a quick rank by S&P 500 SPDR funds, and during the past week, this past week, basically what happened is most of the funds lost, but we can see that real estate is the one that was a big gainer, followed closely by utilities, which, well, basically flat, and then followed by consumer staples. So there's a little bit of a defensive posture that I can see here. So it's possible that we're going to see some money rotate into these three underappreciated sectors, including possibly healthcare as well. So here are the three sectors. Utilities. This one has been under pressure, but I think the bottom has been put in place, and now we can see that the advanced decline line actually also hit all-time highs, and you can see that utilities are nowhere near all-time highs. They're trading around here, and all-time highs were back here in July. So this is a bullish divergence, and most likely we're going to see price catch up with the advanced decline line. The volume hasn't caught up yet, but we'll see where it goes. Basically, utilities are more of an industry group than a sector in any case. Consumer staples also underappreciated, also under pressure, and I think it had to do with the fact that basically money rotated into offensive sectors like technology and financials, and staples are just kind of left behind. But it doesn't mean that they're bearish. It just means that they're underperforming. And having said that, we have actually a couple of bullish divergence here already. The index made the lower high, but we can see that advanced decline line and advanced decline volume line made a higher high here. So possibly we're going to see money rotate into XLP as well. Finally, here's real estate. Unfortunately, there is no breadth indicators. So the only thing I got for them is on balance volume. But this one you can see also kind of a little bit of a bullish divergence. You can see that this is a higher than this high. So it's possible we're already seeing money rotate into real estate. And like I said, this was the only gainer last week. So it's entirely possible money is rotating back into real estate. Anyways, to summarize, I think there is not much yet to worry about in the stock markets, and we could actually see quite a bit of more upside in the weeks and months to come. All right, moving on to bonds. So here's TLT, 20 plus year Treasury Bond Fund. So we sold off quite hard. These are all-time highs here. We sold off quite hard, and these are actually 52-week lows here. Looks like we are bottoming and moving higher. So to me, this right now doesn't look great. It does kind of look a little bit, well, it looks kind of bearish because 52-week lows. So it's possible we're gonna get a bounce and then we're gonna move lower again. It's a little bit more obvious on the weekly charts. So here is the all-time highs in July, and now we're moved all the way to 52-week lows. So looks like we are bouncing, and actually 2 weeks in a row looks like we have rather pretty good looking candles. Those are bullish looking candles. But I don't, like if I'm looking right now, I'm looking at it from a point of view of a bearish security, so I'm looking for a failure basically. And looks like we could rebound 2%, or we could rebound 20%. There is absolutely no way that I'm aware of to tell in advance how far a security will rebound. And especially in this case, this is a bearish security. We could bounce significantly to maybe this broken support, or we can just fail right there, for example, and then head lower. I doubt we're going to get fresh all-time highs, but in this business, pretty much anything is possible. So it is, we should keep our minds open to that as well. AGG is a diversified fund because it contains both TLT and corporate bonds. So you can see that this one bounced harder than the TLT. And in fact, if I just look at this chart, I cannot say with 100% certainty that this is a bearish chart. We did not yet hit 52-week lows here, and so far we can just say that we're basically retesting this breakout. Whether or not we will unravel further down and continue lower is difficult to say. So I'm keeping my mind open again. So maybe we actually do find bottom here and head higher. That's entirely possible. And in fact, here is LQD, which is a corporate bond ETF. This one, very similar to AGG. This is a weekly chart, by the way. It broke out here in April of 2016, continued to all-time highs, and now came back all the way down to retest this breakout. So we can just say that this is possibly a long-term bullish chart, and we're basically retesting the breakout. That's also a one way of looking at this chart. Here is MUB. This is municipal bonds. By the way, this one is unadjusted. So this unadjusted wise, it hit multi-year lows. Let's just quickly see what happens if we add the dividends back in. With dividends, these are not multi-year lows. That these are actually, yeah, these are 52-week lows, because this is 106.04 and we're at 106. So these are 52-week lows, so it took it a little bit harder than the rest of the bond market. And finally, here's junk bonds. This one is outright bullish, all-time highs, and as I said before, junk bonds correlate highly to the general stock market. So I look at it more of an extension of a stock market rather than the bond market. So junk bonds on the weekly time frame here again at all-time highs, and I think this is very constructive for the stocks, for the stock market as well. Okay, here's the US dollar. Moving on to the Forex universe, here's the US dollar on the daily time frame. It's very unusual here. You can see a gap down, and this happened actually after the close of trading at around 1500 New York time, I believe, and then we gap down here at the open. This is quite unusual, and also as you know, gaps are showing strong pressure. So in this case, it's showing strong selling pressure. So yeah, these are multi-year highs, and it's clearly overextended. So this looks like a legitimate pullback to relieve this overbought condition. Now, so far we haven't broken below, well, at the very least, this highs. But I think the pullback, if it materializes, may take it as far back as like 99 here to again retest this breakout. In fact, here it is on the weekly time frame, so basically around here I think we may need to pull back and just kind of consolidate this breakout. I mean, for now it looks legitimate, but as I mentioned before, it's possible that we actually don't continue higher. That's also entirely possible. Maybe we actually turn around and head lower. But for now, I'm treating this as a legitimate breakout, and it's just a little bit overextended, basically. So we need to see a pullback and consolidation. Euro last week hit multi-year lows. Now I think there's quite a bit of buying pressure here, rather, and even on Friday there's quite a bit of buying here. So we could see, you know, a bounce, maybe to the 50-day moving average, and definitely to this area here, maybe even higher. You know, the securities don't really move in a straight line, so we may see a bounce back before continuation lower. I think euro is in a bear market right now, and you know, these are multi-year lows. If you listen to some of my videos before, I continuously said that euro is bearish in the long term, and I mean long term on the weekly time frame at the very least. But you know, you can see there is quite a bit of buying, like 3 times here. Looks like we tried to pierce below, but so far have failed. So this looks like a hammer candlestick on the weekly time frame. So it's possible we see a follow through on Monday, possibly with a gap because of the long weekend. British pound, you know, had a nice selling here. So if you were able to short up here, that's pretty nice gain. But I think same as euro, I think it might be ready to bounce higher. I was actually expecting a significantly more higher bounce to like maybe this area to 1.33. This did not occur, but here's that level, and I think we may need to go back up there to retest this entire downtrend. So far I see a downtrend on the weekly chart, and I don't know if anybody else sees anything else here, honestly. Japanese yen, you know, versus the dollar, also very strong move here, but now we're seeing some selling finally. And this is actually the strongest pullback so far from you know, November lows. You can see there's a little one right here, a little one right there, but now if she continues and sustained selling finally. So maybe we'll finally pull back a little bit, because I actually said this, you know, a couple of weeks ago. If you listen to my videos, you can see that we are now getting to some significant area of previous trading, and that's usually where the resistance comes in, you know, around significant area of previous trading. Long term, I think US dollar versus Japanese yen is bullish, so we see maybe we pull back to like maybe like this area here, to this area of significant trading. like 110.90, 111, and then head higher. All right, let's take a look at gold. This is a gold on a weekly time frame, going back 6 years. So I have my proprietary market breadth index. I call it GBI, Gold Breadth Index. It takes into consideration not just the price of gold, but also various market breadth parameters provided by the gold miners, and they are useful. This particular gold breadth index would have called I developed it very recently, so I did not have it back in 2012. Would have called the bear market here in 2012, and this entire rebound from April till October of 2012 would have considered I would have considered a bear market rally, and I would have looked for shorting opportunities up here. So you can see that we continued in that manner for the past 1, 2, 3, 4 years basically, with multiple attempts at breakouts, and they all failed because they were not confirmed by market breadth. Finally, we did have a breakout here in 2016, which was confirmed by market breadth. Now, over the past few weeks, actually a couple of months now, gold has been sliding from 52-week highs, and finally, to basically a couple of weeks ago, we were sliding pretty strongly, and I think this is because of the really strong dollar. For now, though, we have not, well, according to this system, the market breadth has not confirmed a bear market. Even though we had a pretty significant slide in gold, I don't see a confirmation just yet in this market breadth index. We're somewhat close, and you can see, like, for example, here we came down from normal, bullish territory, came down, and then finally we went below the red line. And that's what I would have said, we are now in a bear market. This has not yet occurred, so I'm basically looking for bullish setups and bullish opportunities for now. Okay, here's gold also in the weekly time frame, but a little bit more zoomed in. So these are 52-week highs, and we had a couple of support breaks. Here's one support break at 13. Here's another support break at 1200. Here I was really worried that we're going to be entering a bear market, but right now this is not a very bullish candle, honestly, but at least we are not dropping anymore, so that's a positive sign. So beginning of the week was really pretty good, but you can see on the daily time frame for gold, the end of the week on Friday we sold off. So we'll see where this goes basically. Right now, maybe this is a bear trap because it looks like we broke below support and then rallied. In fact, it's more obvious on the chart of GDX. So let me show that to you. Here's the chart of GDX, the daily time frame. Here's the support break below. Well, quite a significant support here. Okay, 1, 2, 3 maybe points of touch, and then a bearish looking candle with a gap down the next day. But you can see that we immediately rallied above it. Also, same thing. You can see that this Friday's candle is not very inspiring. So I don't know if gold is out of the woods. I think we need like continued buying basically. We need to see a push for GDX and for gold, well, higher obviously. Well, at the very least, I don't want to see any more dropping of price in gold, because otherwise I think the gold breadth index, here's one for the GDX on the same 6-year chart on the weekly time frame. Yeah, if we see any more price drops for gold miners and for gold, I think the GBI, the gold breadth index, will flip bearish, and then basically I'll be looking to short it. But right now there's still opportunity, or rather still possibility that we will see a bounce. In fact, this is a very promising looking pattern. You can see that this is potentially a hammer candlestick in a weekly time frame with a gap up. So that's, pretty better looking than gold itself. But also the Friday's close was not terribly inspiring. So here is the same chart for GDX in the weekly time frame, and you can see that we ran into resistance exactly at previous broken support around 22.44. So whether or not this resistance will reaffirm itself basically remains to be seen. But if we do punch through this resistance, it will be quite positive, and we could potentially see further price appreciation, and at the very least, for now, avoid the bear market. All right, that's it for gold. Here's oil in the weekly time frame. Oil did gain a little bit, 1.32% for the week. This is 52-week highs and 52-week closing highs, so we do have to respect it. There's quite a bit of congestion and resistance up here in $62 area, $62 area. So if we even get to that area, I think we may see some selling and possibly a rollover. Honestly, I don't know what to make of oil right now, so I'm sort of staying away from this market. There is this convoluted supply-demand dance between just enormous oversupply of oil and attempted production cuts. So we'll see where this goes, basically. Okay, here's natural gas. This one is, in my opinion, clearly bullish. We see 52-week highs, continue seeing 52-week highs. These are all 52-week highs. So that's very positive bullish sign. I got bullish here when we broke out around $2.50. Here's that same chart on a weekly time frame. Here's the $2.50 and a breakout. Pullback. So this was just an excellent buying opportunity right there. Another excellent buying opportunity right there. Now we see 52-week highs, and this is a little bit overextended, because this does look a little bit like a shooting star candlestick, and we see a selling tail out of the top here. So if we get any follow through to the downside next week, maybe we'll see further corrective pattern. I mean, we did break out to fresh 52-week highs, so it kind of makes sense to consolidate the gains now. And finally, here's copper. This one, this is a 52-week high, so I said that I would not recommend buying up here. We are getting a pullback. I am still looking for significant buying pressure, and I'm just not finding it really right now. I mean, this consolidation looks a little bit like we're gonna see a little bit more downside, I think. Here's that weekly consolidation. Not very bullish chart, honestly. Or rather, not very bullish candle, I was gonna say. Here's that weekly, so you can see that we're kind of closing maybe in the middle of the candle, so ideally we should be closing like close to the top of the candle for the bullish candle to be, well, considered bullish. Anyways, that's it for this week's recap. If you have any questions, please don't hesitate to send them in, and please stay tuned on how to find us on the internet. Thanks a lot. Bye-bye. So I wanted to show you how to find us on the internet. Please go to MasterChartsTrading.com. We do have a trade alert services which are live right now, so please consider signing up for the service. It's only $24.95 per month. Also, if you sign up for our mailing list, you get a discounted membership. You get to see what I'm buying and selling and which funds I'm looking at, potential buys, sells, etc. There's quite a bit of members-only content once you log in. There's a lot of information about risk control, which is actually extremely important for traders, because the preservation of capital is really one of the paramount to the successes in trading. There's quite a bit of psychology of videos, psychology of trading videos in the members only section as well. Also, I'm going to be starting a Dividend Aristocrats service. For now, it's free for the members that are logged in, that are already paying members. So that's another benefit to signing up soon. The blog section shows the previous posts and market videos, of course. Also, I've added a new section here, which is FAQs, and I do get quite a bit of questions about various, ideas and questions about the market. So if you do have a question, please don't hesitate to send it in. Send it here, and I'll be hopefully I'll be able to answer it for you. All right. Thanks for watching, and please consider signing up for the trailer services. Bye-bye.